Morning, everybody. A few minutes late here. I'm in a total panic because not very. I realized the agenda. I'm like, oh no. Anyway, here we are. Welcome to Jay's Corner. It is, what is it, the 20th? My goodness, April 20th. And it has been relentless. So let's just talk about the agenda today here, real quick. I'm going to give you some update on something that's new, brand new, about the Affordable Care Act, and let's just get into it. And then we're going to get into the knowledge crisis, retirement crisis, and about markets updates here. So we're going to go quickly. And as usual, please like and subscribe. Hopefully, you get something here for today. It's very difficult. All of these different topics seem separate, they're not. This is kind of the ongoing message here at Jay's Corner, which is that unfortunately, we're given information in segments, silos, fragments. The issue is these fragments interact. And I'm going to give you a real secret, which is right. The knowledge of X bar, the average case, is known. You can easily find it on Google, YouTube, AI, whatever tool you want to use. You can get the average case. That is very, very accessible. What is not as accessible is the fact that when there's a clash, you need to prioritize amongst silos, that information is far more scarce. I'm trying to shed light on that fact. It can't be done in a 10-minute snappy video. I'm sorry, it just simply cannot. So I'm trying to walk the line between digestible, understandable, on something which is inherently very complex, more complex than it's being shown to you, not less so. And that's not, and I'm also trying to not trying to induce fear, right? Because as the fact of the matter is, no matter what the situation, we can make it work. You've dealt with this, you will deal with this, right? I'm not into the idea of crisis of anything other than information or knowledge crisis. That I'm on board with. We'll get into that, as we go. Okay, so the first thing here is ACA, and this is brand new. Literally, that's the reason for today's delay, which is apparently what has happened is if you're part of the Affordable Care Act and you've registered online with an online site, of which I have one, right? healthsherpa.com. I've given you the link. There are links below the video here today. That what you can do is you can enroll in Affordable Care Act and get the APTC. I've written about that for the Alliance for Lifetime Income. Again, more links in the video. But my point is that apparently what is happening is people that wrongdoing is occurring and people are doubling back and switching your plan from the plan that you intended to another plan. And to be candid with you, I haven't had enough time to research precisely what steps would have been required to do so. But this scares the bejesus out of me, right? Because the last thing that I would want is for you to go to a doctor and realize that your insurance is canceled. Of course, that's when Murphy's Law occurs, rears its, form and figure, and why it's called a law. So what ended up happening for corrective measures on that, I'm just going to tell you, very candidly what we do here, which is number one, we don't delete emails. We just don't. It's to protect you. It's to protect ourselves. In other words, I want it in writing, the conversation, the questions you're asking, the responses we're giving, the timeliness of that conversation. It's important, right? We answer almost too rapid. I think that some of our clients are alarmed at how, don't you have anything better to do? How'd you answer in 3 minutes? But the flip side is that's more of a statement of our society. Why is it taking me 3 weeks to get a call back from me? I need my gutters cleaned. It's probably more about the fact that that's negative rather than that we're responding this rapidly. If you've been affected, we will resolve this for you. Okay. And this is an important thing. So you may know somebody has been affected. We will resolve this for you. We will not charge you for it, because I find this so offensive that it is not a good, it makes my life candidly much, much harder, right? In other words, if there's wrongdoing out there, that means that you're even more skeptical about financial people. Now, there can be different reasons for skepticism. And I've basically said that to you in many different forms. But what I'm saying is that if you've been affected, you know someone who's been affected, info@gh2benefits.com. You can see the email below my talking head there on the left-hand column. You can just send us an email. We will resolve this. We will get to the bottom of how this happened. And then also, more importantly, there are going to be steps to unwind you and to get you to the right spot. That is not easily done. I'm not going to say. Maybe you can try to do it yourself, but can you unwind? I'm very convinced that you're going to be able to do so. And if someone can resolve why my computer continues to make this kind of like random sound, I will send you a copy of Maximize Your Medicare for free. Okay. That said, this is an ongoing thing. This is not news, right? Which is that Medicaid disenrollment is continuing. And the latest headline from KFF is 20 million people have been disenrolled. About 90 million people on Medicaid around the nation, right? Which is not a surprise to me. That said, at the end of the pandemic, people returning to work, the reason that the estimates for me at the beginning were wildly too low was because of the fact that people were returning to work. The Affordable Care Act is that if you are offered health insurance from your employer, you do not get to use the ACA and collect the subsidy. Those two things cannot coexist. You can either have your employer plan, or you can pass on your employer plan and enroll in the Affordable Care Act, but you cannot at that point also get the subsidy. Now, there can be exceptions. There can be exceptions under something called the hardship rule, right? That is an exception. Again, the rules here are largely in buyer's favor. This is always my point about health insurance, right? Rules can exist, and it's called the hardship rule. It's not easy to administer. I won't kid you. I don't need to tell you how to, where to contact in order to get it resolved. So if you get one of these letters from your state to eject yourself from Medicaid, you do have options. That also includes people on Medicare. So you can have Medicare and Medicaid. You win the lotto. You're ejected from Medicaid. There are steps to take. info@gh2benefits.com. And the point is that I'm trying to make it so, or impress upon you, that it may seem like there's just a world of wrongdoing, but there's always a way. There's common sense, practical reality. Whether you know how to administer it is a different thing entirely, and that's what we're here for. And this is a Substack. Be sure you can subscribe to it. It's a very complex, complicated, aimed at people with experience in health insurance and also actuarial science, to be candid with you. That doesn't mean it's bad. It's just aimed at that audience. And you can see here that, in fact, that talking about the fact that this seems to be happening when people are using online platforms. Okay, and specific three proprietary platforms themselves. And this is problematic. I'm not going to say, and full disclosure, I have seen the names of these, right? My inbox is full of solicitations Do this, help them that. Do this, help them that. So, of course, I was not entirely surprised to see a name that I had recognized. That's not the framework that we use. These are proprietary, standalone. We are using Health Sherpa, which has direct permission with the federal government. So if we're the agent of record, this is not going to happen. Anyway, let's continue. This past Thursday, I attended virtually. I virtually attended, the following event, and I'm going to show it to you here. So here it is here that there was an event which was Peak 65. So this is the year 2024 is the year that more people will turn 65 than any point, any year in U.S. history. And this is about our country is now prepared, and that 4.1 million people turn 65 each year, starting this year. That means I should be selling 4.05 copies of Maximize Your Medicare. I won't, but you understand my point. And what you have is that how historic surge of retiring Americans will impact the U.S. economy. So this was an invitation-only event. The video is up on the link that I'm going to share with you and what they said. And then there was a panel that answered questions, and I thought to talk about some of that here. So full disclosure here, right? This organization that I'm pointing out here is one that I know very, very well. Meaning that, if we look here, these are the research fellows and the leadership of that group, the Institute for the Alliance for Lifetime Income. And, we go down here and yes. So, we should say Alliance Fellow and author of Jay's Corner, but I guess not. All right. Anyway, and you can see my other quotes here within this group. And it's pretty interesting that I'm going to be very candid with you. A lot of the bottom lines, the research findings, etc., are not groundbreaking to me specifically. What I've very much appreciated was the way that people have stated the issues, right? I'm always thinking about, as I said, it's very complicated. How do I communicate this with you? How do I make it so that you can understand after reading someone's, a PhD's white paper and they're talking in PhDs, right? And when I actually, I'm going to give you some insight, when I talked to Jason and to Cyrus, that when I first joined or talk about joining the Alliance for Lifetime Income, I basically said, just good enough to be able to read PhDs, right? So not good enough to create PhD level papers. Of course, I'm not educated enough for any of that. That's for these persons over here. And this is the absolute, and don't get me wrong, this is the highest end. You will not hear me conflicting with findings. You may hear me saying things to clarify what they're saying. You may hear something about that I may differ on the implications of their findings, but the actual findings themselves, no. Very, very securely stated. That I'm not going to dispute. But anyway, we're back to the forum, and here it is. Here's a demographic that does do a very nice job of explaining the issue. Right, and here it is, which is, and you can see it, that employment income, retirement inequities, and I don't need to tell you about and reliance on Social Security, and then the amount of assets. And these are summary statistics. I get it. I will, like I said, so many different topics, and this is now you can understand why I'm trying to be so even-handed, right? I'm even-handed by nature, actually, but even more so because when I see things like something's not fair, right? Or it shouldn't be this way, it shouldn't be that way. Okay, if you want to fix fair, let's fix inequities, right? And most particularly, right, half of you, I find it very peculiar when I see a female uh, making some complaint about the way that health insurance rules work. I'm like, okay, that's not the fight that I would have fought. I would have been spending all my time to try to fix this. Okay, so meaning that, you know, I'd rather fight the big one as opposed to the small one where we're talking about nuances with it and reasoning that you may not fully understand. This one here, however, has a ripple effect that explains why entire attitudes for investing, entire retirement and savings are different between genders. Well, it's down here. Of course, the answer is yes. This group has, when you make 80 cents compared to 100%, 100 cents compared to the other half of the population over time, and then you are tasked with family matters and then caregiving matters, you're going to have this ripple effect of, retirement inequity, as stated here on the graphic. And this is common sense. I don't need to tell you about this. There are articles, left, right, and center about the topic. And what you have is, the story about individual incidents. This is not the only place that this type of information exists, right? It's not at all. You can see every year that very large, very, very highly rated insurance company. I want to say that Northwestern Mutual is probably one of maybe the sole, which is AAA rated. And it is not the only nationwide, what is now MetLife, for example, certainly having retirement institutes where there are academic papers. But I thought one noteworthy thing, or a couple of noteworthy things here. So every year they create this retirement work and taxes, which is, as you can see, right, same topic in general. And don't get me wrong, to give you an idea, this study where they created these findings, right? This gives you an idea about, the author. This is not just some gas bag, just kind of like, spewing out his opinion, right? This is the background of the person who created the studies by which that infographic were occurred. Now, I don't know too much, right? And I'm just a guy. But the idea that all of this is true, right? Number one, can't be invented. Number two, very likely that it's right and accurate. Again, the takeaways, the interpretation can be different. The facts can't be different. I find it almost impossible that this would be wrong. And it's actually confirmed by common sense, to be very, very candid. So let's just go back here to Northwestern Mutual. I want to show you this one statistic here. And here it is here. So we've seen headlines over the past couple of weeks about the fact that, we need 1.4, America believe 1.46 to retire comfortably at 15% over the 1.6 far outpacing blah, blah, blah. I have marbles in my mouth, so I had to compose myself. So anyway, what we have here, though, what I want to show, and my takeaway here is this, to me, represents progress. I'm not here to tell you that the number is correct. Okay? I'm not. The reason is that how they tabulated 1.46 million, right? How you access that amount of money of cash, right, can be entirely different. Entirely different. We're going to talk about the three-legged stool, and we're going to continue on here, and we're running behind already. So what we have here, I'm trying to finish with an hour. It's looking dicey. So what we have here, more than the absolute number, what I want to point out is the fact that the rate of increase here from 1.27 to 1.46, meaning, and you can see the takeaway here is a 15% increase in a year. And this, to me, is actually positive, right? Which is that the amount of information, the amount of headlines, retirement crisis, retirement crisis, retirement crisis, has at least raised awareness. It has closed, it hasn't solved the financial issue. It has partially addressed the awareness issue. The awareness issue. And so let me just, I'm in the chat. And, you know, apparently it works. I told you I'm getting better at videography. So anyway, here we go. What I'm saying here is that I'm happy to report that the idea, the task at hand has raised awareness, that in people all of a sudden are waking up and going, oh, wait a minute. I don't need $950,000. I need $1.46 million, which is a much bigger number, right? You can see it, 50% higher in 4 years. The reason it's important is because then you can now I can make some progress in explaining then, right? And you can see here was the headline, and this is the press release, that what you have is then the three-legged stool. And we get a lot of information about the three-legged stool, a lot. And you can see here, I was hoping to have every tab up. And you can see here that the head of the Alliance for Lifetime Income here, his article in Barron's about thinking in the past and how to fix it. And the thinking in the past, and let's just talk about that here, is, right, and here's the before, and this is the past. This is the past to which Jason Fichtner was mentioning, right? Social Security defined benefit, otherwise known as traditional pension, and then savings. For sure, right? The issue is now that we now have this setup, right? Which is that this point B, defined benefit, has been reduced dramatically. Unless you work for the federal government or a state government, for example, the idea of defined benefit just simply is declining rapidly. Even educators, meaning that you work for a public school system, you're the 5th grade teacher, even that has started to erode. And I'm sure that if you ask the teacher, newly minted elementary school teacher, unlikely, or you'll have some kind of hybrid between defined benefit and defined contribution. Instead, today, what you have here is defined contribution, 401k, and then what you have what you have here is you don't have lifetime income. You do not have lifetime income. And and I'm going to spare you some time here. Let's hope that I have it correct. Do I have it correct? I'm not sure. It doesn't look like it. Yes. So let's just talk about it here. So this is one of the speakers during the press. So there was a panel discussion here at that forum. And let's hear this person. And don't get me wrong, and I think his name will be up here. You're talking about the head of Corbridge for retirement. So like I said, this alliance has, and certainly with the leadership there, they have circled the wagons with, absolute CEOs of the largest insurance companies and carriers here to try to help educate people about the issues at hand.
Third leg, defined benefit, everyone has talked about how that's really a defined contribution plan, which means 2 of the 3 legs of that stool are not income focused, right? Your personal savings is a pile of money you've saved your entire life. Your defined contribution plan is a pile of money you've saved through the retirement system with your employer. Neither of those provide for a paycheck that you cannot outlive.
Okay, and this is exactly the issue. This is precisely the issue. This is very well stated. And so, in fact, I spent a lot of Friday trying to just excerpt out, for today. And here's one of the highlights to me, because, like I said, the reason I like listening to these, going to these groups, and especially at the Alliance, is because of the fact that the people are more articulate than me. I've got marbles in my mouth, right? And this is very, very well stated, of a similar theme, right? Which is that when you talk about these numbers, this here is that what you can see here is just as he said, right? Which is that this one here is income. And this one here is income. And now instead what you have, this is now gone, meaning that this has to play the role of two legs. There's a reason for me encouraging people to look then at other sources of that income, right? When I have brought up this spreadsheet, Mr. X, right, we are looking at timelines here. Now we are not living in the past, we're living in 2024. And you've seen this here on Jay's Corner in many different locations, right? We've got Social Security, we've got pension income, maybe. We've got withdrawals from your savings, qualified refunds, and now we've got these others. And these are not small here if you have understood how they work. So what you do have on YouTube is 10-minute videos about each of these individual things. And you can see it, right? Infinite banking, life insurance as retirement plan, the retirement miracle, reverse mortgages, how Roth IRAs work. These are different subtopics to get to solving the issue of the fact that now the savings investments have to play the role of two legs. In essence, that's kind of the plan here of everyone's plan, probably rightfully should be, unless your number here is so big. And now you can see what has happened, right? Which is that the people who have big numbers, big, 5, 6, 10. Okay, yeah, $10 million they're looking, and as a result, as long as they're not buying a Birkin bag a week, Jimmy Choo's a week, right? That you're okay, right? There's not a scenario here. You're thinking about other topics, right? Legacy, etc., cost basis, those types of things, inheritance tax. So in other words, you're thinking about some other things when you're like, 105 years old, right? You pass away at 105 years old, who you're going to pass this money to. For most of us, what we have is the idea, okay, how are we going to make this work? And the issue, the challenge here is this one is now gone. Right? And for me, this is then the crisis. I've seen the phrase retirement crisis. I've seen it. If I've seen it once, I've seen it 1,000 times. A couple of weeks ago, time flies when you're having fun. 3 weeks ago, I think it was, I was with Josh Scandlin on Heritage Wealth Planning, his channel. Shout out to him. Thank you to his group. The issue is that it's not necessarily a retirement crisis, because I'm a bit more positive than that, meaning that I can find paths to make this work. I've done it. I do it with people who are, $200,000 of savings. We can find, and they can too. Right? I don't want to be of this person to say, okay, it's a crisis, the crisis, there's no hope. No, let's not do that, right? Let's find a way. That's my thought. Let's find a way. But in order to find a way, you do need to have a resolution of what? Not what I would call a retirement crisis, but a knowledge crisis. That does exist. This one, to me, is just very clear, right? What are possible outcomes? So you can see here the savings. So for the people with big numbers, right, this is just simply not as big an issue. I didn't say it's not like it's a non-issue. I just said not as big an issue, right? In other words, if you have big numbers, the issue is that you're still concerned. I'm not going to take that away because the reality is that level of concern is how you accumulated to this point, right? So I'm not here to tell you to, you got to dance with the date that brung you, right? And if that's because you were very specific and very, very detail oriented, worrying about certain items, it's not my place to say, okay, you need to change your personal philosophy. It's like, no, I'm not here to do that, right? I'll be wildly unsuccessful, I suspect. The one I'm trying to keep away from here is that one stool fails and one leg disappears and the stool falls over. This one and this one here, are real possibilities when if you don't know what is going on, if you have this knowledge crisis, that these are two outcomes that can occur. Yeah, they can. And now you can understand, the punchline, of course, and now you can understand what's this team viewer stuff. I have no interest in team viewer, but now you can see what my point is here. That you can now understand why I start with, why crazy people write books, right? Maximize Your Medicare in its 10th edition. Why? It's because a couple of things. Number one, still positive. I mean, Medicare is still that place, and ACA as well. Now that the ACA exists, for example, what didn't exist in the past, right, was the fact that there used to be pre-existing conditions clause, meaning that the insurance carriers were able to look at your medical history and your medical statistics and deny you entirely. They can no longer do that. So as a result, it's two things. Number one, you have the definite advantage. If you understand the rules, right, you can attempt to find and also reduce the variability of end result. Okay? In other words, too often what we have is we've got a person, and let's just call it $250,000. Just as a number, right? We've got, I can't afford ACA, Medicare, lack of knowledge again, right? And then, and on it goes. And now you can see Mr. Perfect, you've got a very different idea than Mr. Sick-a-Lot. Who's the only person who can know this? You are. Right? In other words, because the sellers, Blue Cross Blue Shield, and I'm using Blue Cross Blue Shield because that's not a particular carrier, right? Everyone knows that Blue Cross Blue Shield is not the one entity, one equity entity. It's not, right? We have different owners in every different state. So that's why I single it out. Blue Cross Blue Shield doesn't ask you medical underwriting questions. They're not allowed. Meaning what? You're cherry picking the combination here to get the healthcare cost control. Why? So to avoid this. And here's the issue, right? Which is that my point, and the reason we're going on and on about it, is about why I start with healthcare cost control understanding. That now if you have $250,000, just as a number, right, you've got your own individual situation. And we're going to run out of time here, but I'm going to go back. No, I'm not. We're going to run out of time here, but later on in this video, I'm going to then share some other quotes here because this person also, on and on we went here. Jean Chesky, one of the colleagues, she is excellent, legendary interviewer. That what we have here is, and here it is. I want to say here.
Alliance has been doing around simpler terminology. It's funny, we actually had a conversation before this panel about how do we talk about lifetime income, and protected income has been found to be a much more embraceable terminology by individuals because it's exactly what they care about.
And this is my point, right? Which is that this is why I'm always looking for better ways, more descriptive ways, more helpful ways to describe function of money. Function, not jargon, right? The jargon is there because of regulation, meaning that the sellers are not there to be unlawful or untruthful. No, right? They have legal contracts here. And also, it's there to govern the representatives, the me's of the world. Okay? Meaning, if I make a suggestion, they're going to make sure that it's suitable. Best interest, suitable. We've got like a litany of regulations. We have wars in the background that I'm not even updated you on regarding the regulation about the sales and marketing of financial products, whether that be mutual funds, your IRA, your 401k, whatever it would be. And I'll just be very, very candid with you. It just goes to show you that they're trying to fix or trying to resolve some set of challenges, and that's not invalid. But to me, they're describing as someone else, one of the other fellow panelists or one of the other fellows on the Alliance for Lifetime Income, who's an attorney, right? And I'm going to put it here, which is the regulations are about how financial professionals are doing their job. That is true. When I heard that stated in those words, I'm like, okay, I'm going to hijack that. Definitely hijacking that phraseology, right? Which is the regulations are about how professionals are doing their job. Here's the punchline to the entire video. Here's the punchline to basically all of Jay's Corner, right? Which is that the regulations are about how professionals are doing their job. My channel, the Substack, my explanations are what? First. Now I'm going to slow it down here before we switch topics. Right? For me, what is missing? What is missing on all the channels that you see? I don't watch tons of channels, right? But my point here is that the focus here should be on what is the job? What? The issue is that we've got a bunch of regulations on the planet in the United States and everywhere, don't get me wrong, which is that the regulations about how they're doing the job. So in other words, if you're trying to buy life insurance, they're trying to make sure that it's suitable within the budget. Okay, which is not disputable, all right? That's totally fine in isolation. In isolation. It's not talking about has the person while doing examined all this and see how this fits in here to make the numbers fit, and then to have the total in other words, the total net worth to be maximized over time and fit the goals, meaning that it is not about, right? It's about that specific business event, which is you applying for life insurance and the amount and the motivations. It is not whether or not you've actually solved what you are seeking. And sometimes you don't even know, meaning that sometimes you have not asked the complete set of information, the complete set of questions. And then we're right back to what not that the professional uh, did the thing wrongly or unlawfully. I'm not saying that. No. What I'm saying is that the knowledge crisis here is so big because you've asked the financial professional a question, they answer. They're going to answer lawfully, overwhelming, despite the headlines, right? Even despite what Andrew said in ex post factoid, right? That is still to me the minority. It happens. There's bias in the reporting and the search for clicks. I get all of that. Overwhelmingly, they're going to be lawful. That is not the issue to me. That to me is known. I want to know what the job is. Before you ask me about long-term care, I'm going to ask you, okay, what is it you expect? Do you understand this? Does this fit inside of here? Why? Are you, in other words, the amount of, and then does it ultimately fit in with the way that this entire work? And now you understand. Now I'm peeling back the layers to the onion and to the comprehensive financial planning, right? Which is that by comprehensive, I'm like, tell me what the job is, as opposed to product and the 10-minute YouTube videos, which is okay. What's the little line item actually mean? What is this line item? Right? It's basic. Oh no. Which is, right? What is a Roth IRA? How do you get money into the Roth IRA? Right? That is actually not the same thing as what is the point of having the IRA of the Roth IRA. From there, then you can have one of the silos here. Not in reverse order. That's the issue here. And I'm going to end it there because I think that when I explain it in this way that you get it. And the bias here, and I'm not saying, again, I'm not saying unlawful. I'm not saying unlawful. But you can't, and I'll search anywhere for people who are more articulate than I. Right. And that's a lot. And, Bill Simmons, very, very famous person in podcast world, right? I've been a follower for over a decade. I'm a sports junkie, but he still stated it this way.
Any place we've ever worked, right? There's certain people in a company that their job is just to get to the next month. And they don't want any wins. They don't want any losses. They're just thinking about the end game. How do I stay here? How do I keep my job?
And this is the issue. This is the issue, right? Which is that the regulations are about how do you keep your job. But for me, this is more important. What's the job first? And now you can see it, right? Which is that it doesn't matter what the walk of life is. He's talking about Bill Belichick and the Patriots here, right? Or actually, he was talking about the Falcons and the fact that the Belichick wasn't hired at the Falcons. That's what this excerpt's about. That's the context. But this we don't need to be in the sports management industry of the Atlanta Falcons. I wish I had enough money to own an NFL team, but you can understand my point, which is that I think that you can understand what I am saying. I'm on the positive side here. Somehow I woke up on that side of the bed. I'm positive that everybody can understand exactly what I'm saying, which is we need to focus here on what the job is first. And then from there, we get onto the other topics. And now you can, and only then, do the state of your state, and you can see how upside down, bass backwards, we're addressing the matter, right? We've presumed as if, okay, well, this is going to do the work of now two. Right? And we're just going to have savings and investments rip up here and pay for the entire and compensate you for the entirety. That's what we have. And now you can understand what I'm saying over here. This is March 16th when I intended to have I wasn't feeling well. I can't remember why. Maybe my spidey sense. And you can see the original thumbnail, which is complacency kills. And the date here was March 16th. And the reason was not because I saw some stuff in financial markets. I did, but that wasn't actually the reason. The reason was not about calling direction. The reason is, okay, we're here now, right? And what else do we have? We're here, right? You're not a controller of financial markets. You don't have a crystal ball. I don't either. What do we have? We have some likelihood it can be that we are right. We are also some likelihood that you are wrong. And by you, I also mean me, right? This is not a thing where you're, 100% I'm right and 0% you're wrong. Again, if you're 100% right on anything regarding financial direction of anything, call me up. You're retired by Wednesday. No problem, right? Access to instruments to get fully retirement money for you and generations is available by Wednesday. Sure. If you're 100% right, no problem. The point is, even you know this, right? Let's not pretend that, that you've got, I'm certainly not in that instance. In fact, maybe I'm too skeptical about my own self. Nevertheless, out we came. I stated that, okay, it's different as I may be. I'm not feeling well, and complacency kills. My point was, look, a month ago, right, is different than today, right? It's April. It's literally almost exactly a month. And what do we have? And there it is. So now we're on to the second segment. Welcome to the financial markets update. Here we go. We've got how many more minutes? Not very much time. So now you can see my point, which is a month ago, literally a month ago, exactly when I luckily there's randomness, all right? There's part very well prepared and observant, right? I'm not going to apologize or even be able to explain to you about the stuff that I've seen in financial markets. Impossible. It would take a decade. And outlier events, it would take more than a decade. The reality is that from that time to here, down 5% on equity market. And this is a big number. And the simple reason is why? Because now, what used to be 100 here, right, is now not 100, but it's now 95. And now you can see what the issue is with many of the counterparts that are trying to oversimplify matters on YouTube generally, right? You've presumed this, and now somebody said 7, I keep saying this, right? Which is somebody's like, oh, well, we've assumed 7% a year. Right? So now you're at 114. Instead, you're at 95 right now. So let's just blank this out for a second, right? In order to get from here to here, right? You're not at 7% a year. You're at like 9% from here, right? 4 months have passed, and then, or 3.5 months have passed, and then you're going to get to 114 after the end of 2 years. And so when you're off, you can see the ripple effect. And now what do you have? And now you can understand why I'm saying there's a knowledge crisis. That what ends up happening is someone's out there saying, okay, glossing over certain assumptions. Sounds credible. They can have my letters after my name. They probably haven't gone to my school, but you understand my point. They can have this. It'll sound credible. It bounces back. It always does. Right? This tells you that cannot be the case. And oh yeah, by the way, these same constructs are everywhere where you're building any formula for any valuation on almost any topic. Meaning that this is known by what? Only finance? I promise you the answer is no to that, right? This technique, this construct, this blue curve to the far right here, how many industries use it? Oh, basically every. Right? A farmer has known, oh yeah, by the way, 3 standard deviation events can occur. So when I have to explain to them the use of insurance during extraordinary events, I don't need to explain to the farmer a thing. Not a thing. Right? They've lived it. This is why I think that's why Jay's Corner exists, right? Because I am convinced that people can adopt what they already have experienced and know to financial products. It is a question about stating it in ways that you can understand and relate to what you already know. And in many, many cases, better than I. Many cases. Let's continue. So back to the story here, the issue here. And you can see what has happened. So this is BlackRock. Again, I've used this example in the past. And basically what happened here is this is your multi-asset portfolio construct by the heads of the class, BlackRock. It gets no more reputable. It's the largest asset manager on the planet. Year to date, minus 0.3%. In other words, on a portfolio basis, this is actually where you are year to date. So while we spent the first 3 months going, hey, the world's a better place, AI is going to take over the world, etc., stocks to the all-time high, stocks to all-time high, stocks to all-time high. That's all you heard. The reality is that this is what's going on. And that's how quickly it changed. 1 month. And for that reason, I gave people this heads up. And the reason for that is because it affects this down here. And now you can see them tying together all under the same package, right? What you have is what? At the very beginning of the broadcast today, what did I say? I said, look, you're being told in 10-minute segments about segment 1 and segment 2. And now within an hour, I've shown you, bang, all of these topics all are related. There's a ripple effect. And now as a result, you can see the weaknesses on oversimplified explanations. 1 portfolio, 4% rule. Those are nice averages in general. But I promise you, for example, let's just take, for example, this person over here. This person with $250,000, for example, right? Let's just use that as an isolated situation. And that person's not isolated, right? This is many. If we just use the 4% rule, that's $10,000. $10,000 may not be enough to pay for your cost of living during a year. So you have a forced 5%, 6%. And now what ended up happening is all the numbers then are all mucked up, right? You thought that it was this. And then you take 4%. Well, okay, now you're at 95. And now you said that 4% of 95 is, let's just say, for example, and you can see it. That's $3,800. That may not be enough. That may not be enough in order to play the roles of these two other legs. So it's far more involved, more complicated, not less. Not less. Okay. no better than less than 1%. No better. This number, just for clarity's sakes, for newcomers. This are targeted for persons that are 65 on this year. Okay. So 16 minus 65. 51. Okay. Even then, right here in the guts of earnings power. To give you an idea, if you think that these guys are just like, throwing darts, randomly throwing darts. Okay, they're using this construct. Yeah. All these people with the identical curve of different shapes and sizes are using different setups, using different ways of getting there. No. And by the way, that is, if you need and want further information on this, I've got deep in the weeds conversations here. But my point here is that what has happened, and the reason for the market's update here is, as I've said to most, or on Jay's Corner, when it comes to financial markets, you've got one thing here first, and that is the 10-year note. This is stocks for show, bonds for dough. This is why I have repeated it tirelessly. Right? Denominator. Interest rate is this R. And what you've seen here is you've seen, not coincidentally, rates down, equities up. Rates up, equities nothingville. In fact, you could say equities have done better than expected year to date. You could say that this even is better than expected. I can make that case, right? Because of the fact that you've got this stuff going on. Now, what has been a little bit surprising is the fact of the speed here, right? You can see it here on this last bit, the speed. And that does coincide with a couple of things. Number one is, speed here. So what you have is then, right, and the reason that is the case is because it has changed our perception of this curve. Right? It has changed the pace of change of interest rates. It's not only level, but speed. And because the pace of change has changed so rapidly, that now you've got a curve. Notice I haven't said a thing about war yet. Oh yeah, have I talked about Netflix's earnings report? No, not a thing, right? And instead, what I've been saying, and if you've watched the other videos over the past days, what I've been saying, I'm almost out of time here, which is that I've said what? I said, oh yeah, by the way, this other thing here that no one pays attention to, except for if you're a tourist and you're going to Frankfurt or London or wherever you're going. This doesn't look big. It's big. This is earlier this year. 1.11 to 1.065 between continents is enormous. Now, it's good for Euro investors if they want to buy US dollar assets, right? But my point is this telling you what, not necessarily making no statement about direction. What it's telling you is this is more volatile than it seemed the entire time. And this is why I was saying that, why, and now you can understand the linkages, right? Why I've been saying, hey, look, let's just squint over here. You're instead right here, you were not there, but you were not at flat, but you were at some point on March 18th, you were at 105. Now, if you have the ripple effect from that point, now you can have a very different set of monies here. And for some people who might face challenges here, that can be very, very, very valuable. So you need to assume, or not assume, you need to ascertain, is what the word I was searching for. You need to ascertain, okay, and now you can see all the other weaknesses, and we're going to end shortly, I promise. But I'm going to have important points here, which is it allows you to say, look, when you see this happening, you need to understand and take very good stock of your timeline so that you can understand how much up and down you can take. Because now this is the case, right? Which is that these, if you don't own a second layer, an annuity, for example, an immediate annuity, which is creating the second layer, instead, if you're using this base and withdrawals to replace this, you need to be especially careful. What we have clearly is we've got a flatter, wider blue curve on your far right. That is clear, very clear, right? Without me making a prediction about the endpoint, right? For me, what I was saying, complacency kills, was I'm like, the other stuff is not as stable. Why are equities this narrow in terms of outcome, right? When the underlings, the structure below wasn't as stable at all. How are equities doing this outperforming in that version, right? It really is Microsoft's entire outlook changed over the past 3 months, or from January through March? I would have found that very difficult to believe, right? Everyone's already optimistic. Everyone already knows it's going to, be one of the major companies on the planet for, pretty much the next decade for sure. My point here is that when we have this, equities follow. It is this much smaller market. Not close. Not close to this market, not close to the bond market. With that in mind, here we are still going to be pinned. The last thing I'm going to say, and I'm going to end it here with observation about financial markets. The problem here now, today, is normally what we have is, because of this construct, which these guys follow, guys, they're not just guys. This, like I said, this is head of the class, right? If there's a single party, there it is. That what ends up happening is that this construct here tells you that, okay, if stocks are riskier, then I need to reallocate to bonds. And the problem here is that bonds here are not being supportive. So now you're in a pickle. And not only that, we now have violence, or increased violence, in the Middle East. And without being a predictor about, military conflict or where it's going to go, as we know, war unpredictable. I'm sure someone in history 201 has stated that war is unpredictable. That what you have here is, I could look at this result and I could say to myself, okay, why aren't interest rates lower here? If we had more fear, and this is the safe haven of the planet, in the safest currency on the planet, which I can now, if you're a foreign investor, you can buy now for less euro. How is it that this security has only improved by so little? And then if I flip this coin, presume that it's a quarter, US quarter, that I flipped it to the other side, meaning if I flip the scenario to the other side And the most important input is R. Now the scenario, and if you followed what I've just said slowly, as I'm speaking more slowly and more carefully now, I always speak carefully, but you understand my point, which is now I open the door to notably lower. And while not predicting notably lower, knowing that that is now a scenario here under a wider, flatter blue curve. Can you be both predictive? And what it is to do is just to raise awareness. Raise awareness. We have a knowledge crisis. Right? And then from there, you're deciding on, okay, does this really matter to me or not? Meaning, you win the Powerball tonight, 0.5%, minus 3% on your leg here, right? Because you've already stored away some money to basically do this. So now you just have for this. Well, you've won the Powerball, right? Which you should always take as lump sum. That's a topic for, how many articles are there about this? Like fantasizing, okay, what do I do with all the money? Anyway, your bottom line is you should take it as a lump sum, period. Anyway, here we go. My point is that if you understood what I've said here, which is now you've swung the door open possibly on much wider outcomes, then you double back and think through, okay, how affected am I here? Right? You've assumed 100 and you've seen some simple YouTube video. Oh, here's how you do it. One simple portfolio to rule them all. Anyone can do it. You can invest as if you're like worth $10 million. It can't be the case. It cannot be correct. Can't be to apply this type of blanket statement. Yeah, so now we're at compared to January 1, right? You're no better than 100. Well, what happens if I told you we're at 95? What happens if I told you at 90? And now how are we going to get to 114 from 90? Not 7% a year. Here's your news flash, right? Right. This is 90 times 1.07. Right? From that spot even. Right? What do you get? Oops. What did I do? Right? You're 10% behind 2 years have passed. Oh yeah, by the way, that presumes that you haven't had to withdraw. And now, in fact, what you have is you've got a retirement crisis. You don't have a retirement crisis. You have a knowledge crisis about the fact that you didn't understand how this worked. And what I'm saying here is that the financial updates here that I've been providing here are not being predictive about the direction, about where the end point is. Yeah, like I said, if you had a crystal ball and knew with precision precisely where it says, don't worry, you're retired at the end of day on Wednesday. It's because you don't know. But what people unfortunately have is we've got all these industries, these are some smart dudes. Just want to put it to you that way, right? I mean, I don't lack confidence, but these are PhD minimum over here, right? So, and you've got all these think tanks and other types of resources making these kind of statements, and the reason is because, in fact, there's a knowledge crisis about the way that it affects this entire timeline, and because why? Bill Simmons tells you what he tells you. Well, unfortunately, as I've stated, that all of the regulations are about, and the information, the advertisements, et cetera, are about how they are doing their job, which is not precisely what people are seeking, which is, okay, how am I going to not outlive my money? How do I not run out of money? How do I not run out of money? How do I avoid that? How do I get the most out of the money that I've saved and pursue the retirement or whatever second life? Maybe you want a second career. Maybe you want a third career. Maybe you want to buy 20 islands. I'm not here to define that for you. But rather, okay, how do we get them both? We get that by more information. And the issue is that you're being told by sellers, individual sellers in their who may be expert in an individual line, which is actually not the full task at hand. If you start here and then you go, okay, what does it, one of the excerpts is, what does it cost? I would, and we've run out of time here. Maybe the part for the different way, right? Which is, let's first start with, okay, what's stuff going to cost? Find out what's left, then we make it work, right? For some people, unfortunately, that means a lower standard of living. For some people, the stool falls over. We're trying to prevent that. But instead, and then, if you're exceeding, don't get me wrong, the flip side is, there is this book, and you can see it. Some people have this pride of like, okay, well, my balances haven't changed in my retirement account for 30 years. I'm like, oh, really? If that's the case, you have been sitting on your wallet for what? If you've done so intentionally, if you've sat on your wallet and you're 90 years old and your balances are all the same, I better hear that your main objective is to pass money to descendants. Right? If it's because I've lived in fear of downside, etc., well, okay, well, that's the point of why I start with healthcare control. You see what I'm saying? In other words, and the reason, because if you have the right amount of, then you don't have this knowledge crisis. And you can see this ripple effect, because if I can get you there, understanding if you start with what does it cost, then what do you get? You then have a license to spend. And this is your holy grail, right? Which is, when you have the license to spend, this is another way of saying, pursue what you want on your terms. Right? I'm not here to dictate what that would be. I hope it's not, pursuing as like, something that's not legal. Right? But my point here is this license to spend, and now you can understand what the point of why the message of Alliance for Lifetime Income is one that is exactly consistent with mine and Maximize Your Medicare, Jay's Corner, right? Is because an annuity does this by increasing by one leg, by you not relying on this, but then putting it there, so you're dealing with a smaller amount, perhaps, of course, because you've allocated. Of course, advisors said call that a new aside. That's the reason, right? As Bill Simmons said. And then on the flip side, if you just turn the kaleidoscope just slightly, another way of doing this is healthcare cost control. And what the positive news there is, you have the definite advantage if you're properly informed about how it works and then how to select. All right, everyone. Have a good weekend. Hope you've enjoyed today. Hope you got something from it. Please like and subscribe. I finished in an hour and 15 minutes, a little bit better than I thought, and just in time. And for people who, I've gotten a lot of nice compliments from people, in different areas and things like that. But if you want to see crazy, crazy great, later on YouTube today, FIDE space chess. We've got candidates tournament, and it is like nuts. And by the way, I tell people, and this will literally be my private comment, right? This timeline here, this first number doesn't matter. It just so happens here, right? And the reason is the earlier you start, then the amount of adjustments required is smaller. And then due to time and now positive interest rates, those small adjustments can yield big results later. So please, to other people, you've got adult children. It's never too early to start down the path of solving what we currently have, which is this knowledge crisis. All right. Thanks again. Have a great weekend.